Hello, this is Ahura with the Global Economic Outlook in the week ahead, which is going to be the 24th week of 2024. However, as always, before going to watch the week ahead, we will check first the previous week and data we had so far to understand what's happening in the market, and then we can check the week ahead and what we can expect from the data and overall market condition. Last week, overall, we had four main events which may change the markets. In Europe, we had a central bank meeting on Thursday. ECB ECB cut the rates by 25 basis point as it was widely expected. In the statement they told that we don't give such a clear way what we are going to do in next meetings. All will depend on the data we will get. In Canada on Wednesday, Bank of Canada also cut the rates by 25 basis point and continued the way that ECB started. Started the way that ECB next day continued. Bank of Canada also had, based on the weaker economic growth and lower interest rates, they had rooms to start cutting their rates, and it was widely expected. And on Friday in United States, we had the employment data. NFP non-farm payroll data showed that in the United States in May we had 272,000 newly created jobs, but unemployment rate increased to 4% from 3.9% a month ago. Average earnings also increased by 4%. Yeah, average earnings also increased by 0.4%, which means that 4.1% on the annual base. And the other data, which was very important, it was the PMI numbers that we had last week, Purchasing Manager Index for both manufacturing and service PMIs we had. Overall, data showed that the manufacturing PMIs in most developed economies in the US, Europe, and other countries around the world, it was weaker than expected. So once again, they warned about the global economic growth. In China, export and import data also showed that, as if you remember, a month ago we had imports. But in Chinese import increased by more than 8%, which ended with the 7.6% export in this month. And this month we had 1.8% import only, increase in import, which means that the next month we will have a less export. So this positive trade balance that we had next month can get affected by smaller digits. That was what we had in the last week, and with these data, especially with the employment data, with the PMI numbers, market counted on faster rate cut and 2 more rate cuts in the United States. So stock markets increased last week, and then with the labor market data, they told that the market counted less on rate cuts possibility in September, which is right now is under 50, but on Friday it increased, the not cutting the rates increased more than 50% for holding the rates, not rate cuts possibility. And now for the week ahead, we had for the week ahead, finally we'll have the Federal Reserve meeting in the United States. In the United States, the main and the most important data we'll have will be on Wednesday's inflation numbers. Wednesday and Thursday we'll have inflation number, and Tuesday and Wednesday we'll have a Federal Reserve meeting. Federal Reserve meeting will start on Tuesday, will end on Wednesday, and we'll have the statement and dot plots, most important, on Wednesday. Market widely expected more than 98% market estimate for not cutting the rate. So if the Fed is not going to cut the rates, and we know that what's important is the dot plots, they will be very important. Federal Reserve projection of interest rate, economic growth, inflation, which all of them comes together in estimates called templates called dot plot, as they put the dots on the estimates that they have. So that will be very important. And Mr. Powell press conference right after the statement, 30 minutes after publishing the statement. Before Federal Reserve meeting statement, we will have the inflation numbers in the United States. Market estimates the core CPI to increase by 0.3% as it was in the same speed of the last month, which means that the annual core inflation will drop to 3.5% from 3.6%. But the headline inflation, which is expected to increase with a slower pace, with the 0.2%, less than 0.3% in April, still the annual inflation supposed to stay unchanged, remain at 3.4%. If there's a thing that, and let's say that, and then I will give you the point that's very important point. On Thursday, also we'll have a PPI numbers, producer price index, which is expected to increase by 0.2%. As inflation increases in other countries, other continents, other developed economies, same is going to be happening here most probably. So the possibility of seeing the same expected numbers for inflation or even higher than these numbers, these expected numbers, and even higher than these numbers, the possibility of this scenario is much more than to see these numbers or less. So these numbers and higher means more hawkish possibility than more dovish possibility. So stronger USD pressure on the stock markets have more possibility than vice versa. But producer price have been falling in other economies, which is expected to fall in the United States as well, to just increase by 0.2%. And that's the most important data that we have in United States. Out of the United States, the Bank of Japan, after the central bank in Europe and Canada and United Kingdom, now the Central Bank of Japan also will have the interest rate decision on Friday. We do not expect any change on interest rates level, but on the purchasing program, we will have on PP, we will have some changes on the bond yields policy, on purchasing equity purchasing policies. We will have some changes here. Why? Because Japanese yen has been falling so rapidly in the last month. So now it has to get some support from the central bank and the government, which is expected to go to this way. So we will not see any changes in interest rate, but yield policies can be changed and support the Japanese yen a little bit, or at least help the Japanese yen to not falling more than what it already happened to it. Then in other countries and other economies, British economy also will have very important week with the GDP numbers, with the labor market data, with the trade balance, with the industrial production. Employment numbers expected to increase to 4.4% or stay at 4.3%, but generally the weaker number is more possible. We have a more possibility for weaker number in the labor market than a stronger number. In a GDP front, also we expect the British GDP to increase very slowly by almost 0.3%, 0.4% in April, and industrial production, we will have also we are expecting to increase by 0.2%. Overall, GDP, overall the data that we are expecting from United Kingdom are weaker than expected, or we are expecting a weaker number, which means that the central bank in United Kingdom also will have an option of the rate cut for the next month. And then in China, we will have the inflation numbers, same as we will have the inflation numbers for most of the European countries as well. In China, we are expecting to see a 0.3% increase in inflation, which is very rare. In the last month, in recent month, inflation in China has been falling. And we had a negative inflation or zero inflation, which is very negative, very bad news for the Chinese economy. Now we are expecting to see a little bit increase in inflation with the changes that they had in the policies, in monetary policies, in economic policies, in purchasing house policies. All of them, they helped the inflation to increase a little bit in China, which is going to be a positive news for energy markets and Chinese economy as well. I told about the energy market. Don't forget that the next week ahead will be very important for energy market, as we will have the OPEC monthly report, we will have the EIA short-term economic outlook, and we will have the IEA monthly report. So all monthly reports that we are publishing usually every month, it's going to be published this week for energy and oil market, and for oil, it will be very important for that, for the people, for the traders and investors that they're trading or investing in energy markets. The only others that left is labor market data, which is going to be published from Australia. We are waiting for Australian labor market data also, which is expected to see the unemployment rate at 4%. I do expect the unemployment rate to stay at 4.1% or even to increase by 4.2%. Inflation number, the data from the Australian economy is not that optimistic. In Japan, we will have a GDP numbers as well. On Monday, we are expecting to see the GDP again to fall by 2.0%, sorry, by 2% in the first quarter. And it is very negative news for the Japanese economy, and that will be one of the other reasons that the Japanese central bank to hold the rates and continue the supports that they had from economy and stock markets, and not increasing the rates. That's the overall data and numbers that we're waiting to see, expecting to see in the coming week. Looking at the chart, this oil chart, as you can see, it's a WTI chart, and WTI price is expected to stay at the same levels or even increase. On Monday, we had a sharp falling because after the OPEC Plus meeting, market had a kind of misunderstanding of the result. The Saudi Arabia and Russia, they announced that this oil producing supply will decrease. They will continue the cutting the oil supply cut to by end of 2024. Sorry, there's something, I don't know if you see in the camera or not. There's something is moving around here. Sorry. Okay. Yeah, as I was telling, the OPEC Plus meeting on the last Sunday, we had OPEC Plus meeting and decided to continue the supply to by end of 2024. But they had a note that they told after October they can reduce the supply cut, the cut limit. This is they had a 2 million barrels a day supply cut. They told that from October, after the October, we can make it less than 2 million supply cut. So, but they made the exception if we see more demand in the market. The market ignored to see the second part of the if, and after the if, that if we see the more demand in the market, so the market had an overreaction to the first part that okay, we will reduce the supply cut after October. But after that, on a Tuesday, Saudi Arabia and Russia, they informed the market that we can reduce the supply cut if only we see more demand in the market. Then it was market reaction was somehow balanced and started to increase the prices. For generally data that we had from the economies, they were not a positive, they were not that good, and that's why the market counting on a weaker economy. On the other hand, weaker economy means the less hawkish policies, more dovish policies against supporting the economy. So generally the data and the condition, and on the other hand, the geopolitical tensions that we have, all the data together, they means that we have a more possibility to see same level or even higher than to see the same level or lower. On other markets, the US dollar index, after falling last 3 weeks, increased on a Friday to change the trend, market trend. as the labor data was very positive, or the labor numbers that we have labor market from the United States, they were much better than estimates at the first glance, but slowly market's going to understand the data we had, and to see that these data on the first glance that they were very good. But if you go deeper, we can see that wow, we have so many disappointing numbers in a detail as well. So the market before Federal Reserve meeting can somehow correct itself, but not much, a little bit correction about 104.60 mark. But to wait and see the Federal Reserve meeting results. Probably we will have a less dovish, but we will not have a we will have a less hawkish, but we will not have a dovish stance. So which means that the US dollar can slowly increase, but not fall, and have a rooms for increasing. Can slowly fall, but not, can slowly decrease, but not fall, and to have a more rooms to increase in the next week, but not such like big jump. So probably again, between 104 and 105 will be the best area that we can expect for US dollar index. For the stock markets, S&P 500, if you look at the S&P 500 chart, we can see that S&P 500 after reaching, well, here, after reaching a new high, again started to fall. And if what we are expecting to see from Federal Reserve meeting on Wednesday, which means less not dovish policies, but less hawkish policies, also means that we will not see the support, but we will not see the much fall, but slowly decreasing the prices. It's what we are expecting, as you can see in the technical chart also. So slowly, probably price will fall lower, and if the price falls under 5,300, then we can see much lower levels as well. Just the overall market condition, data, and expectations we had. If you had any other question, please don't forget to write down under this video in Instagram or YouTube. I will try to get back to you as soon as possible. See you. Bye.